Welcome, class. Settle in, because today we are diving headfirst into a massive financial mystery. We're going to figure out if India's central bank secretly dumped billions of dollars in gold just to fight off an economic threat. Now, as a senior financial analyst, I can tell you right now, in the world of high finance, rumors spread like wildfire. They travel halfway across the globe before the truth even gets its boots on. So in this explainer, we're going to put on our detective hats. We're acting as forensic accountants to separate the sheer market panic from the central bank reality and uncover what actually protects a nation's wealth. All right, here is our docket for today. We've got the missing gold mystery, the oil price threat, debunking financial rumors, the mark-to-market illusion, gold security versus instant liquidity, and finally, India's domestic gold strategy. Let's get right into it.
Section 1, the missing gold mystery. We're starting right at the scene of the crime, where a massive chunk of our financial safety net supposedly just vanished into thin air.
So here's the question. Did the RBI actually secretly sell off $12 billion of India's gold? This is the exact panic-inducing headline that sparked intense political debate and totally spooked the markets not too long ago. And look, this wasn't just some random internet conspiracy theory, right? It actually stemmed from a shocking report by Bloomberg Economics. They basically suggested the central bank was doing something totally unprecedented to defend the Indian rupee.
I mean, just look at the sheer scale of this number, $12 billion. The report claimed that in a tiny two-week window leading up to May 22nd, the recorded value of India's gold reserves dropped by this mind-boggling amount. And get this, at the exact same time, the RBI's liquid foreign currency assets mysteriously shot up by about $7.5 billion. So to the untrained eye, yeah, this looked exactly like a smoking gun. It looked like a desperate, secret sell-off.
Section 2, the oil price threat. Now, every good investigation needs a motive, right? To understand why anyone would suspect a sell-off, we have to look at the massive global economic pressures bearing down on the rupee at the time.
Let's map out how this perfect storm actually builds. Step 1, you have geopolitical conflicts in West Asia causing global crude oil prices to just absolutely spike. Step 2, since India imports over 80% of its oil, a price spike means the country suddenly needs a massive amount of US dollars to pay those higher import bills. Step 3, all that heavy demand for dollars causes the Indian rupee to weaken rapidly against the USD. And finally, Step 4, central banks are historically forced to intervene with liquid US dollars to prevent a full currency crash. We actually saw this exact dynamic play out during the 1990 Gulf War oil shock, where India literally had to airlift gold out of the country to secure emergency foreign exchange. So you can see how this chain reaction perfectly explains why a central bank might, theoretically, take the extreme absolute last resort move of selling its foundational gold to get those liquid US dollars.
Section 3, debunking financial rumors. Okay, so the motive was definitely plausible. But was the crime real? Let's cross-reference these wild market rumors with the official alibi and the actual facts.
The response from the authorities was immediate and totally absolute. Both the Reserve Bank of India and the government's Press Information Bureau fact-check unit swiftly stamped the viral report as 100% fake. They issued direct statements saying, quote, "Reports are entirely incorrect. The public must only rely on official central bank data." This right here, this is an absolute masterclass in how government agencies have to swiftly debunk false financial media to prevent catastrophic panic. The second this official statement hit the wire, the panicked markets immediately began to calm down.
As students of finance, these are the 3 essential steps you absolutely have to take for verifying sensational news before you trust it. Number 1, question the panic-inducing headline. Number 2, check the official central bank data. And crucially, number 3, understand the valuation shifts. Trusting unverified financial news without doing this can lead to disastrous investment decisions and widespread economic panic.
Section 4, the mark-to-market illusion. This brings us to the real core of the mystery. If the central bank didn't sell a single ounce of gold, why did the official reported value drop by $12 billion? Well, here is the plot twist.
The crucial accounting mechanic at play here is called mark-to-market valuation. You see, central banks don't just log the price they paid for an asset a decade ago and forget about it. No, they constantly update the value of their reserves based on daily, fluctuating international market prices and exchange rates. So if global gold prices dip even slightly, the dollar value of those reserves drops on paper.
Think of it like this. Let's use a super simple analogy. Imagine you own a house. The real estate market takes a slight dip, and an appraiser says your home's market value just dropped by 10%. Did you suddenly lose a bedroom? Did your roof just vanish? Of course not. The physical house is exactly the same. The exact same principle applies to central bank gold. The paper valuation fluctuated wildly because of global market prices, but the actual physical asset never left the vault.
The official data cuts right through all that noise. India's actual physical stock of gold remains completely untouched, totally steady, and super secure at exactly 880.52 metric tons. Literally not a single gram went missing.
Actually, if we dig a little deeper into the official data, we find the exact opposite of a sell-off. Far from abandoning its safety net, the RBI has actually been increasing gold's share in its total foreign exchange reserves. It jumped from 13.92% in late 2025 up to 16.85% by May 2026. The RBI is actively accumulating gold to bolster economic defense and prevent the very market panic the media was stirring up. They certainly aren't selling it off to plug short-term holes.
Section 5. Gold security versus instant liquidity. Even though this specific rumor turned out to be totally false, it opens up a really critical debate for any student of macroeconomics.
Look at this table, because it shows how a nation has to constantly balance wealth to mitigate sovereign risk. On one hand, you have the strategy of selling gold for liquid US dollars. The big pro? Instant digital cash that you can deploy right now to halt a short-term currency panic. The con? Selling gold signals ultimate desperation to the rest of the world, and that leads to a massive loss of global trust. Now, on the other hand, holding physical gold provides unshakable intrinsic value and a phenomenal long-term defense against inflation. The downside? Well, a gold bar can't just be digitally zapped into the forex markets to instantly buy up failing rupees. This right here is the ultimate central banker's dilemma, prioritizing long-term sovereign security versus immediate digital intervention.
Section 6. India's domestic gold strategy. So moving past the short-term rumors and those theoretical debates, we really need to examine the central bank's actual long-term master plan. What is the RBI really up to?
The ultimate goal is right here: de-dollarization and strategic diversification. The RBI is actively working to insulate the Indian economy from Western geopolitical sanctions, from inflation imported from the US dollar, and from foreign currency manipulation. They are doing this by making absolutely sure their wealth is tangible and fully under their own sovereign control.
And how exactly are they executing this? By aggressively moving gold out of foreign vaults like the Bank of England and bringing it home. Today, a massive 77% of India's gold is stored domestically, right within its own borders. Just a short time ago, that number was significantly lower. By storing physical gold locally, India ensures that no matter how volatile the global landscape gets, they possess a rock-solid economic foundation that literally cannot be frozen or seized by foreign powers.
I want to leave you with this final thought for our masterclass today. We've seen how easily rumors of a $12 billion sell-off can spark sheer panic, and we've seen how absolutely crucial it is to understand the real math behind the headlines. But as we navigate a future filled with volatile digital currencies, fluctuating oil prices, and really complex geopolitical conflicts, is domestic, physical gold, wealth you can actually hold and protect within your own borders, the ultimate unshakable guarantee of national sovereignty? Think about that. Keep analyzing, keep questioning those headlines, and I'll see you in our next explainer.